Big thank you there to my colleague Thabo Mdluli, and it is indeed Job Seekers Wednesday here on Business Unusual on Newsroom Africa Channel 405. Before we get into the thick of things, let's first take a look at the big business news that are moving markets on this Wednesday, and one of those is in relation to the share price of Africa's largest company by market capitalization, that's Naspers. They fell almost a third today as its new subsidiary Prosus, which includes, of course, some of its assets like Tencent, some of its businesses on online advertising and many others. They've listed in Amsterdam on the Euronext exchange, and Prosus includes the prized stake, as I said, in Chinese tech giant Tencent and several other businesses. And joining me now to take a look at this story and many others is Nolwandle Mthombeni, who's an equity analyst at Mergence Investment Managers. Welcome once again, Nolwandle. How are you?
I'm good, thanks, and you?
Very well, thank you. Nolwandle, let's start off here. Maybe for some of the people who might not be familiar with this particular story and the background behind Naspers trying, I guess, to unlock some value here and to do away with the discount they were trading at by listing some of their, I guess, more sizable and valuable assets in another vehicle in Amsterdam. How did all of this start? And more importantly, I guess, what's the impact going to be for the markets here in South Africa?
Okay. So basically, there are three main reasons why Naspers took out Prosus and listed it, and the main reason is Tencent. So what happened basically, if I give an example, you had the bulk of the assets being Tencent, which was an investment made many, many years ago, and the Naspers share price was trading at a discount to the value in Tencent. So what management decided to do is that if they can just take a bit of take the Tencent holding and put in a different company, being Prosus, as well as the international e-commerce assets sitting in there, and listed into Amsterdam, what will happen is, one, the discount is going to close up. Two, in terms of market caps and weighting, Naspers was getting too big for some of the indices, so it automatically meant that many of the asset managers had to sell down, and then so therefore it would deal with that. And then the third factor was that the fact that there was going to be a diversified investor base, because once Prosus is listed on the Euronext exchange, it becomes a developed market company, and then foreign investors can also have an allocation to it. So those are the three main reasons. And ultimately, I think the biggest of those, the most, the overriding one is the fact that the discount that has been happening, because you'd find that, the whole value of Naspers as a whole is, is basically 10 cents, and there's no value being placed on the other assets. So, and even if we see that MultiChoice was also spun out and unbundled, also as a part of a journey to just kind of close up that discount. So ultimately, that's the big thing, what people are looking at, Are we going to see that closing of that discount, or are we going to see the, opening up? So what's really going to happen?
Nolwandle, we saw, I guess, a massive sell-off earlier on this morning, about a third of the value of the share price of Naspers here back home, I guess, decimated there, and a similar kind of jump or rise on the part of Naspers as Prosus in the Euronext in Amsterdam. Is this a part of traders rejigging their portfolios in response, I guess, to sort of the now shifted weighting of Naspers in some of the South African indices, or is this by and large, I guess, people saying, look, let's maybe sell off our holdings here and look for value elsewhere?
So it's completely, a function of the fact that they've took off about, I think almost 30% is now being listed of Naspers shareholding is now listed in euro. So you expect that, one to fall down and one to fall up. But in terms of the quantum of how much, it depends. So currently now, if you look at the combined entity of Prosus and Naspers, it's only about 3% up in total.
Okay.
So, but the downward move in Naspers is, it matches the fact that there's an upward move about 30% up on Prosus on listing. So, but the combined entity is still, I mean, if you combine them, the market cap of the two is about 3% if I last checked. So it's basically the markets. And what helped the Prosus listing is the fact that Tencent closed up positively, almost 2% in Hong Kong. So that provided some momentum for the overall total assets of the two to go up.
Yeah, just maybe from a more political economy perspective, has Tencent been able to sort out some of the regulatory challenges that they had in China? And one would think, I guess, with their sort of dominant role, not only in Shenzhen, but even in Hong Kong as well, that they might also potentially be affected by some of the political unrest that we've seen in Hong Kong.
I think, the management and board of Tencent have got, a lot of political ties, and now being there, they're able to set the tables when these political discussions are being made, especially around gaming and the regulation and the cutback and all the, the political noise around there. So the key thing is that the management of Tencent are in those talks with government, and they, have conversations and try to deal with this so that, Tencent is still able to grow and, you know, issue games and play them and get the consumers to keep on playing. So that's the key thing, is that, you know, they are part of discussions and talks and they're engaging, so to be able to, you know, continue to grow in the industry.
Yeah, yeah. We've also seen, I guess, in news, you know, subsequent to this particular listing here, of Naspers continuing its strategic mission to become a full internet business by 2021 or 2022. They've continued to buy sort of classifieds business, online food delivery businesses, and all manner of other businesses in Asia, which continue to have a large captive market and a captive audience in many of those billion-strong economies.
And I think, you know, it's been a good strategy for them. If you think of, you know, say, fourth industrial revolution and where technology has been, I mean, you know, there's a huge growth in that area. So they're capitalizing and trying to, you know, become the first top 3 player in the markets that they're in, and forming the right relationships in terms of with incumbents, whatever regions they're in, and they've got that scope, and they've got the management team, and they've got the scale advantage to be able to do that. So it's definitely a good strategy to pursue, because there's still, you know, scope for growth. Because, you know, in terms of regulation, as far as, you know, e-retail, e-commerce, it's not as much as, you know, say, other sectors. So it's definitely, there's opportunity for them there, and if they can keep on grow there and get market share, even if sometimes it's forming a partnership with other companies, that's also another way of getting the scale out there.
Yeah, there's been a simmering discourse in South Africa, least of all from the moment where Naspers announced this listing on the Euronext in Amsterdam, that, you know, Naspers is trying to take money out of the country. They're using this as a platform with all of the risk and uncertainty that we see in the South African market to take their money out. Now, for some of the people who might not be familiar, I guess, with corporate strategies like this, what would you say in response to that?
Well, still 70% of the market cap is of Prosus is still held by Naspers shareholders, which is listed in South Africa. Yeah. So if they really wanted to take money, that number of foreign shareholders would be much bigger. So I think that's not the case. And, you know, this has been in the works for quite a while, and this is one of the solutions that came to, as I mentioned, the fact that the discount is quite high. And, you know, for all intents and purposes, you know, the Prosus business is all foreign income. You know, it's foreign business. Tencent is a Chinese company, and the e-commerce and retail, the foreign assets. So the South African business, which is the e-commerce of South Africa, and Naspers is still listed in the SA Exchange. Yeah. So I wouldn't actually say that this is them trying to take money out of South Africa. So it really just, you know, is part of the strategy going forward. Okay, all right. Yeah. Let's pause there for a second. Going to take a quick break now, but when we come back, I want us to take a look at some of the palace politics and the power plays that are happening in many of the boardrooms in the real estate investment trust sector. We saw all of the stuff that happened with the Resilient Group last year, and it seems now that Fairvest and Safari and even Comprop are finding themselves in somewhat of a triangle there when it comes to the acquisition of low-income mall owner, the Fairvest, and going to take a look at that particular story on the other side of this brief break. You're watching Business Unusual here on Newsroom Africa, channel 405. We'll continue on the other side.